Welcome to the Titans of Industry interview, and today I am very excited. I'm thrilled to have with me Buck Joffery. Buck Joffery is from wealthformula.com, and his podcast is a must, because what I love about Joffery is he's not naive. He's very realistic. This guy is doing everything from real estate. He's a doctor. And then he's a real assets guy. He doesn't do anything he avoids paper assets. He loves to see and feel and touch what he's investing in, and that's something I actually appreciate. And what I want to talk to Buck today is about real estate investing and how this can be a very important vehicle and a portion of your asset allocation as an investor going forward and throughout the rest of your life. Become a real estate investor, because we're all basically in the real estate business, whether we're living somewhere or renting to somebody else or doing any of the other niches of real estate. So Buck, how are you today?
I'm good. Thanks for having me.
I'm very pleased to have you on, actually. The more I speak with you, the more I'm impressed with just your overall approach to investing. You're very sound, you're very serious, very realistic. You don't put numbers out in the sky. Everything is very systemized. And what I wanted to ask you is, I know you've been investing in real estate for a while now, and you have great success, but let's say you're just starting out right now. You want to buy your first rental property, and for example, you live in Chicago. What do you do? First thing, what's the system here?
All right, that's a great question, because I'll tell you exactly what I was thinking about doing when I first finished my training back in 2008 and 2009. I was here in Chicago, and I didn't have any money. I was, just starting to make a little bit. The one thing that's really an interesting option for people out there who are potentially interested in investing in real estate is through, believe it or not, the FHA, the HUD loan. Now, people don't know this, but you can actually use an FHA loan to buy not just single-family homes, but you can use them to buy up to 4-unit buildings. And the cool thing is, you only have to put 3% down, and your credit score can be, I think it's down to 580, right? So 3% of listen, at some point you got to have a little bit of money, but if you're talking about a $200,000 building, you put 3%, that's like $6,000, right? Put it on a credit card or something. I don't know, but there's ways to get in.
What is that plan called? I remember it from back in 2009 already. It was already out there.
It's basically a first time. I think I don't know what it's an FHA HUD first time homebuyer loan.
So
I think
like a limitation to how many homes you can buy with that plan, if I'm not mistaken.
Well, I don't know if it's I don't know how much of a limitation there is, but I do know is that the only rule is that you have to live there for a year. So my plan was I saw a 4-unit building in Chicago that I was going to buy, and I was going to live in that unit with my wife for a year, and then if we wanted to move, we could move. And at that point, we'd have this asset that was at least paying for itself, if it wasn't even cash flowing necessarily at that point. But if we left, but if it at least paid for itself, you'd have this, appreciating asset that all of a sudden could grow into several $100,000 someday. So that's certainly I think it's a very viable approach. And we ended up not doing it because my wife didn't want to live in the 4-unit and she wanted to get a house. So especially if you're not married and if your wife's not picky, it's a great way to go. So
I understand that. Now, I want to ask you this. So let's say you're trying to get a pool of homes to look at. Where do you go to start viewing available houses?
Well, I mean, I think the issue is, it depends on everybody's particular situation. I mean, a lot of times, if you're just talking about single family homes, I think as a general rule, it's not a bad idea to do it in your own backyard, because you'll know the neighborhoods better than anywhere else, and you'll know what things are worth and what they're not. The other
advice. That's
right. And the other option is here for people who don't have a lot of money, and you live in a place like Chicago, or you say you live in Seattle or San Francisco, and you want to try to get into a single family home for $1 million or something, right? There's plenty of opportunities with what are called turnkey providers. I know of some in places like Alabama where you can get into a single family house, for $50,000. And obviously if you leverage that, you might have to put 15% down, and it's still not a huge amount of money. But if you can scrape that up, you've got an asset, and you have a turnkey operator. So that's definitely an option. And there are a lot of very good turnkey operators out there. You just have to find the right one.
Just for people listening who don't understand what a turnkey operator is, could you explain that? Because that's a very good investment for people who do not have the time to learn real estate business, but they want to get into it and they need active income right now.
Yeah, there's you like the idea of cash flow, you like the tax benefits of not paying much taxes on the income that generates, and you like the idea of potential appreciation, but you don't have time and you don't want to be a landlord, and so you don't want to deal with tenants, termites, toilets, whatever. You can, if you find the right turnkey provider, what you can do is you can buy, you can connect with them and say, this is what I want, help me find it. Okay, they find it. And then they, in a lot of cases, they will immediately also connect you with the property manager. And effectively, it might as well be a bond, right? Because you're not doing very much with it. You've just bought a real asset and you're having somebody else manage it. So I think, particularly in places like, I think Alabama is a great market for this, especially if you don't have a lot of money, because if you find a good turnkey operator out there, which, if somebody wants to connect with me, offline and get a hold of me through my website, I can certainly find. I can't think of any offhand, but I know I have them in my Rolodex somewhere of opportunities to get in for not very much money.
Sure. So these states where the entry price for these homes are lower is a great place to cut your teeth. And also, I'm listening to you and I'm saying to myself, on the flip side, people who are younger and are looking for to get started in real estate, not to create wealth with rentals, they can become the turnkey providers. They can scour the streets, they can find the deals, they can knock on doors, they can talk to people and get these properties in front of these investors who want them. So there's a two-way door here, from what I'm listening. And by the way, that is a great way to get into real estate if you only have a few $1,000s for gas money and maybe some marketing money, and you can go ahead and get sweat equity.
Yeah.
And then tell them, look, I'll do all the research, I'll do all the work, I'll find you the properties, I'll tell you what they're worth. You just need to go in and basically make your offers. You pay for them and you give me a 1% or 2% or 3% of the equity. And so you can get started that way. I know a lot of people who have been very hard workers and got their first taste of real estate that way. So this is very exciting. I want to ask you about states that can be exciting in the in the foreseeable future, the next 3, 5, 8 years. What are some of the most important attributes that states can have in order to attract real estate investors to them? I know obviously real estate it comes down to the purchasing power of the local people, and that is a derivative of the job market. So what are some of the best job markets and the best tax-friendly states in the United States?
Well, I think the first one obviously that comes to mind is Texas. And Texas, probably for a variety of reasons. The fact that it's got a nice climate, the fact that there's no there's no state taxes, which then drives in business, and then the business drives in population. So I think I think Texas as a whole has a tremendous future in the next few years. And especially when you look at a place like Dallas-Fort Worth, which is already, is growing so fast. It's, I think that those are the types of things you have to look at when you're when you're buying property, especially if you're looking at an appreciation angle, which is, what's happening with populations, what's happening with jobs. And if you can figure that part out, then you're going to probably figure out the right market to invest in.
Sure, and just to give you my side of it, when I got started and I looked at deals, real estate deals, what I tried to figure out is like which markets are good for appreciation and which markets are good for yield. What I used to do is I used to take the price of the home and I used to take the income and say how many times the yearly income is the price of the home. And if it was larger than 3, then that market has it's not affordable for the homeowner. He's probably going to rent.
Right.
If on the flip side that ratio was towards the income of that individual is $60,000 a year and the homes are only 120, those homes have a lot of upside potential to go. That's a great appreciation market. And what I tried to find was a market that does both. So it's right on that cusp.
Yeah, I think part of that is trying to figure out where, if you can get ahead of the curve on understanding where new things are happening. Like for example, I think in Fort Worth they just announced, I think they're going to have Google move in there, and then there's a place in Phoenix where they're going to have an Apple plant. These things are all big drivers of jobs and of economies and of millennials and hipsters and then so I think those are all things to consider.
Sure, and just to be more practical, a few of the things you can do besides making great connections with realtors, with mortgage brokers, with bankers, just with investor clubs of other real estate investors where you can learn these things. You can also call the Chamber of Commerce, and it's public information. You call them up and say, hey, I'm a real estate investor, and I'm just thinking of knowing which companies are going in and out of this of downtown Phoenix or downtown Chicago, and they tell you, you know what, Google's coming in next month with such and such new jobs, and they tell you a lot of precious gems that you can know. You can also using the city records, you can also know where new sewer systems are going and where they're developing, so you know where the city, which size the city is growing to. So you even
Right.
So there's many ways to do it. You just gotta figure out how to do it. But I think relationships are very important, because you know what, and you tell me how important are relationship in this business, because if you got sound relationships, you can see deals even before other people see them. You can bid on them before the rest of the people have a chance. If you've got a realtor that trusts you, he'll bring you the deals first. If you've got a banker that trusts you, the same thing. How important has been this relationship factor in your career?
I think it's critically important. It's the old saying, what is it? Your network equals your net worth, or vice versa, right? I think that's very true. I think that people like to, in general, do business with people that they know, like, and trust. And so the more people the better chance you have at a deal. So you always hear about the pocket listing, right? The listing that the broker brings to a client before they ever post it, before they ever broadcast it. Well, who do they go to? They go to people that they know, like, and trust, and who they think can close the deal quickly. Because from a broker standpoint, what do they care about? at the end of the day, they just want to close the deal, right? I mean, a difference of a few bucks here and there for them is not going to make a huge difference in commission. So they want to make sure that they can sell a property quickly. And if you have potentially established yourself as somebody who can, buy quickly, it's going to go to you. But it takes time. So, part of it may just be, also somebody who likes you enough to say, hey, I know you're looking here. What do you think of this property? And, that sort of thing. So I think I think in business in general, that kind of network is, very, very important.
Sure. And okay, so I want to switch gears with you here. I want to talk about a little bit what you're doing right now in real estate, and tell us about the exciting things that are going on for you and for the Investor Club.
Yeah, so my show tends to focus on people who are a little bit higher paid professionals. So they have money and they like the idea of real asset investing, things that are not Wall Street, generally private placements. I mean, they don't always have to be. So a lot of my listeners are what we call accredited investors, which they make $200,000 or more, or have a net worth of $1 million. Those kinds of people qualify for what I have, which is an investor club, and we have a lot of private placements in that. But the show itself is different. It's not just about accredited investments. It's not just for people like that. We talk about a lot of ways to invest your money outside of the stock market. For example, one of my shows is with a guy who buys mortgages from banks. He'll buy, using investor money, he'll buy notes. He'll buy like 100 notes at a time or 200 notes at a time for pennies on the dollar, and then instead of evicting those people, he rents the homes back to the owners that were getting foreclosed on, and he makes it so that they can pay the rent. And at the same time, because he's bought the mortgages for so cheap, he still comes out way ahead. And he gives his investors 12% return. I've invested hundreds of thousands of dollars in that fund over the years, but you can get in for as little as a couple $100. And so if your listeners are interested in that one, it's ahpfunding.com. So that's ahpfunding.com. And I like that one because in particular, there's a social message behind it too. And frankly, I know the guy whose fund this is. He's just a good guy, and he's gone way out of his way to make this accessible for people who don't have that much money. So there's lots of opportunities out there. We talk about a lot of stuff that it's not just for accredited investors, but people who just want to get in the game of investing outside of Wall Street. Sure.
Buck Joffery, the wealthformula.com. Very exciting stuff coming for you, and we'll have you back again for sure. This has been a very exciting interview. Thank you very much.
All right. Thank you.
Real estate is a relationship-based business, and the more solid your relationships are, the better your deal flow will get. In fact, you will be able to look at deals that others won't be able to and have a true competitive advantage. Relationships in real estate are everything. In the coming 4 months, March, April, May, and June, a full and detailed report will be published on Wealth Research Group about each of the 4 major profit pillars of real estate. The first one is cash gains. If you have zero or limited funds, no experience, and only a few existing relationships in your local community's real estate market, and you want to get started today, you are what we call a tier 1 investor, and you should focus on quick deals that take 2 to 3 weeks to construct with cash gains, which will require none of your own funds. I've done those deals myself, and people want to dedicate a few hours per day and build quick deals with $1,000 to $5,000 in profit potential, are executing these kind of strategies nationwide, and we will teach them. The second thing is passive income strategies. If you have liquid funds and want to build a passive income stream, then you are a tier 4 investor. And your goal is wealth generation, as residual streams free up your time and you're able to fund your lifestyle with tenants' rent. Tenants pay rent regardless of the Dow Jones, which is why many investors choose to diversify and own real estate rentals and not only dividend-paying stocks. The third profit pillar is appreciation. And unlike flippers or speculators who simply pray for prices to rise, depressed market investors look for specific opportunities that have high likelihoods of appreciating and even use leverage and tax benefits to generate high returns. And we will publish a full report about that. The only thing you need to learn is that if you can find houses that are selling at near liquidation cost, so the price of the home to build is the price that the owner is willing to sell the house, the appreciation could be significant. The fourth profit pillar is for professionals only. It's for the seasoned investors who are fixing up homes. When you do this correctly, this becomes a main source of business for you. And Wealth Research Group in June will release a full step-by-step process on how to do this. In fact, we'll show you how we created a $57,000 profit in 1 month, a $57,000 profit in 1 month using this strategy in Texas this July. Wealth Research Group will publish a preliminary report on how to conduct market analysis on the 17th of March. And this will go to our free newsletter. So if you're not signed up, I can tell you that this is an exclusive for our members. And our debut report on major pillar number 1, cash gains, is going to be released on March 24th. By learning new skills, you increase your confidence and are able to expand your toolkit. And that is what innovative investors do. So I'd love for you to join us next week as we have great interviews lined up, and to stay focused on doing exactly what you need to do to thrive in 2017.